Good day, future CPA. We are going to discuss about Philippine Accounting Standard or BAS 34. That is all about interim financial reporting. Here are our objectives. We have to define what an interim financial report is. We have to state the scope and applicability of the BAS 34, meaning what particular situations and circumstances that this standard would be applicable and up to what extent. Then we have to go into the recognition and measurement principles as applied in interim financial reporting. Definition of terms. We have to know that interim reporting again is the preparation and presentation of interim financial report for an interim period. An interim period is less than 1 year, which is either a semester, a quarter, or a month. Then, an interim financial report means that it is a financial report containing either a complete set of financial statements under IAS or BAS1 as discussed, or it is a set of condenses to financial statements under IAS 34 for an interim period. So, a condensed version of financial statement is actually a shortened version. It is because we prepare letter A, a complete set that would be taxing or that would be burdensome to the respective preparers or financial statements. So it's allowed under the standard to prepare just a minimal version or a shortened version of it. The question is, what's the scope? Reminder, this is not a requirement, by the way. However, this is applied or an entity which is required by government, securities regulators, stock exchanges, and accountancy bodies or accounting bodies. There are some that are required depending on their industry or the regulatory or regulation by default, such as monitoring by the supervisory body. Then, if that entity elects or chooses to publish an interim financial reports in accordance with PFRSS, which are the two situations. On the other hand, BAS 34 encouraged us publicly traded entities, or meaning to say these are the entities that already apply to Securities and Exchange Commissions or SEC, in which their shares are to be traded in the stock exchange in Philippines. We have the Philippine Stock Exchange or the BSAIS to provide at least semi-annual interim financial report and publish them not later than 60 days after the end of the interim period. So this is a semester, then as required or as encouraged, because this is clearly a word encourage us. Requirement here, or the second one, would be worth early or semester. What would be the content as we said or mentioned? It's going to be an option. It's either the complete set under PAS1, the complete set of financial statements under IAS1 would be the statement of financial position, also known as the balance sheet, the statement of profit or loss and other comprehensive income, which is just known as statement of comprehensive income, because remember, these two items, the profit or loss, which is our net income from operations or loss from operations, and OCI, terms will result if we added to into total comprehensive income or the comprehensive income. Hence, this is called a statement of comprehensive income, which is formerly known as income statement. However, that income statement is just a statement of profit or loss that is without OCI. Next, statement of changes in equity. So this would show the components of the equity. For example, for a corporation, normally we have three parts: share capital, retained earnings, now known as accumulated profits and losses, and the reserves, before now known as other comprehensive income, and whatever changes that they have in that respective accounting period to beginning balances. Then what will be the plus and minuses, and then the ending balances. Then number 4, the statement of cash flows, which will show the 3 operations. Under PAS 7, we have operating, investing, and financing activities. The cash flows, whether inflows or outflows. And the number 5, the notes to financial statements, which would show additional information. This would also show to us the significant accounting policies and other explanatory information. And then we are going to make comparative information from one accounting period to the next. And number 6, this is a statement of financial position as at the beginning of the preceding period. So this is when, for example, there would be retrospective adjustment, whether that's an application of accounting policy or a restatement of values or errors that were made in the previous accounting period. Next would be the minimum content of an interim financial report under BSAIS 34. As I said, if we say condensed, meaning the shortened version of the previous complete set, except 6 because normally we prepare the 6 for an annual financial statement, preparation and presentation, and select those explanatory notes. The term condensed means the shortened version, which is the minimum information required under PAS 34. However, again, an entity is allowed to bear or publish or present a complete set of financial statements to have the interim financial report, or that will serve as an interim financial report. Furthermore, an entity is also not prohibited from including in its condensed interim financial statements information that is more than the minimum line items or selected explanatory notes set out under PAS 34. Minimum is minimum, but we can add more. This is an example of semi-annual interim financial reporting. For a semi-annual, we prepare for a calendar year, which begins January 1 and ends December 31. So the end of the 6 months would be June 30, and another 6 months would be December 31. So for the statement of financial position, it should be, of course, the end of the 2 for the statement of comprehensive income. It's for the period ended 6 months, or same for the current, but for comparative, that would be June 30 of prior year. It's because this is for that. Whereas the statement of financial position is as of, meaning the cumulative balances, statement of changes in equity, same as comprehensive income, as well as the cash flows, in which these are for the periods and that are ending. For the quarterly interim financial reporting, which is going to be at the end of every month, if monthly of course, but then if quarterly, that's going to be end of every 3 months. So in this example, it is the 3rd quarter, which ends on September 30 of a particular year. So that's going to be on July, August, September, or August and September. If we are going to run down from January, so January, February, March, April, May, June, and July, August, September. So that's all for statement of financial position. Prevent and compare them. Now, what about for statement of profit or loss and the OCI items? So in that case, it would be to have both have to for the 9 months ending. So we prepare a comparative this year and prior year, and also for the 3 months ending for that quarter this year and prior year. However, for the changes in equity and cash flows, it will be the 9 months ending.
For businesses which are highly seasonal and entity business which is experiencing the peak season, in which that will be the topmost season for sale as we speak on, and the lowest will be the slack season. So the standard encourages disclosure of financial information for the latest 12 months and compared information for the prior 12-month period. In addition to the interim period, financial statement. So it's just like we have the complete set, but it's just 12 months prior comparative. So latest and the comparative prior 12 months, if in addition to the interim. Recognition and measurement. If, for example, there will be gain and losses arising in an interim period, they are to be recognized immediately and are not deferred because they are the part of the statement of comprehensive income under profit or loss. So we have example for gain and losses for costs and expenses as well as the income will be incurred or that will be earned over the year. The art will be spread out over the interim period. So just like for example, under the systematic and rational allocation method, depreciation, amortization, and the prepayment of expenses like property taxes, insurance expenses, interest expense, and even the 13-month pay and other year and bonuses. Because this 13-month pay and other year bonuses actually came from the performance that are the basis of them came from the performance for the prior months, including December or let's say last month. Then, discretionary income, meaning optional income, they are recognized immediately in the period income is earned. For example, the dividend income, so not to be allocated for income tax expense in the interim period. They are computed using the best estimated of the weighted average annual income tax rate expected for the full financial year. So if, for example, let's just a year without change for income taxes or income tax rate, so clearly the way that one, for example, 30% now or corporate income tax will be the same. But if that will be the year of change, so that the times that we're going to compute the weighted average. So the weighted average is simply like multiplying the rate in how many months that is applicable. And other will be how many months and we get the total and we divide it by 12. So that will be the average. Of course, the total number of months must be 12 for that to be applicable.
Measurement in the interim period are made on a year-to-date basis so that the frequency of reporting annual, semi-annual, or quarterly does not affect the measurement of annual results. Next, we will going to tackle about the examples of application of the recognition and measurement principle. Una nga doon ay ang same accounting policies as annual. Kailangan natin na malaman na ang accounting policies that applies, it should be through interim. Revenues from products shall be measured on the same basis as for the annual period. Preparation of interim financial reports requires greater estimation than annual financial reports. Under nga ng same accounting policies as annual is intangible assets. In intangible assets, research and development costs are generally expensed. Development costs are capitalized only when all of the recognition criteria as set forth under the past 38 are met. Deferring costs as asset in an interim statement of financial position in the hope that the recognition criteria will be met later in the financial year is not justified. Inventories are measured at the lower of cost or NRV. The following are examples of how to apply the NRV test at an interim date and how to treat manufacturing variances at interim dates. A. NRV is determined by reference to selling price and related cost to complete and sell at interim dates. B. is manufacturing cost variances are recognized in profit or loss at interim dates to the extent that those variances are recognized in income at financial year end. May mga iba pang halimbawa tulad ng foreign currency translation gains and losses, interim financial reporting in hyperinflationary economies, and impairment of assets. Next is seasonal, cyclical, or occasional revenues. Revenues that are received seasonally, cyclically, or occasionally are not anticipated or deferred if not appropriate in the end of annual period. For example, sa December, hindi pa uso ang mga paputok o fireworks. Hindi mo agad pwede sabihin na 1 million pesos ang kikitain ko sa January dahil New Year na, uso na ang mga paputok. That's definitely wrong. Hindi mo dapat agad i-anticipate yung sales or revenues mo from that specific date. For the dividend income should be recognized in the interim period if the right to receive such dividends has been established in that interim period. Otherwise, such income should not be anticipated if dividends have not yet been declared or was declared on a subsequent period. Next is government grants. Government grants are recognized only if there is reasonable assurance as of the end of the interim period that A. The conditions attached to the grant will be fulfilled, and B. The grant will be received. Third is costs incurred unevenly during the financial year. Costs that are incurred unevenly during the financial year are anticipated or deferred in the interim period only if it's appropriate to anticipate. Pag sinabi natin na naka-cost incurred unevenly, it's actually uneven kung hindi siya constant format. Pwede siyang anticipate kapag appropriate yung type ng cost na yun. Ito naman ay yung mga under ng cost incurred unevenly during the financial year. Una doon ay ang payroll taxes and insurance contributions. If employer payroll taxes or contribution to government-sponsored insurance funds are assessed on an annual basis, the employer's related expenses recognized in interim periods gamit ang estimate average annual effective payroll tax or contribution rate. Another example is a year-end bonuses. A bonus is anticipated for interim reporting purpose if and only if A is the bonus legal obligation or past practice will make the bonus a constructive obligation for which the entity has no realistic alternative but to make their payments. And next is a reliable estimates of the obligation can be made. May mga iba pang halimbawa ng costs incurred unevenly during the financial year. Yun ay ang mga major planned period maintenance or overhaul of provisions, contingent lease payments, pension costs, vacation, holidays, and other short-term compensated absences, other planned but irregularly occurring costs, contractual or anticipated purchase, price bag, and depreciation and amortization. Illustration 1. Recognition and measurement in interim periods. You can pause the video if you want to read the problem. For the unadjusted profit before tax, 1 million, yun yung nakalagay sa problem. Write down of inventory, we will going to deduct the 80,000 sa 100,000, kaya nakuha yung negative 20,000. For the impairment of asset, yung 250,000, dideduct natin yung 210,000, kaya naging negative 40,000. Unrealized gain na 25,000, i-deduct natin yung 20,000 kaya nakakuha natin yung 5,000. For the depreciation, yung 360,000 times to the 1/4 kaya nakuha natin yung 90,000. Yung employee benefits naman na 240,000, ito times natin sa 1/4 kaya nakuha natin yung 60,000. Ang total adjusted profit before tax ay 795,000. Next is use of estimate. Under ng use of estimate ay inventories. Full stack taking and valuation procedures may not be required for inventories at interim dates, although it may have done at financial year end. Hindi na nire-require ang full stack taking kapag inventories na naka-interim dates dahil pwede naman siya gawin every financial year end. Next is classification of current and non-current assets and liabilities. More thorough investigation for classifying assets and liabilities as current or non-current at annual reporting dates than interim date. Next is provision, updating of the prior annual provision rather than engaging of outside to do a new calculation. Determination of the appropriate amount of provision such as provision for warranties, environmental costs, and site restoration costs. Next is pensions. Reliable measurement is often obtainable by extrapolation of the latest actuarial valuation. For the pensions, past 19 employee benefits requires that an entity determine the present value of defined benefit obligation and the market value of plan asset at the end of the reporting period. For the contingencies, its measures may involve the opinions of legal expert or other advisors, but such opinions about the litigation, claims, assessment, and other contingencies and uncertainties may not be needed at interim dates. Inner valuation and fair value accounting. Past 16 allows an entity to choose at its accounting policy the revaluation model whereby items of PPE are revalued to fair value. And past 40 requires an entity the fair value of investment property. Thank you for watching. We hope you understand about the Chapter 9 entitled Interim Financial Reporting. God bless!